Friday, December 1st, 2023, Maneko 64, home of alternative economics and contrarian views. Well, back in the early 90s, mid-90s, the Japanese banks were called zombie banks. And it looks like American banks or US banks are going the way of the Japanese banks. We're going to look at how the US banking system is a dead man walking or a zombie, really a zombie system. The FDIC, of course, they just published their Q3 data. Came out yesterday. We're going to look at that today. Before I do, I like to make a few announcements. The first one is that there's a lot of spammers or scammers in the comment section of my videos. They impersonate me. They say call me or WhatsApp me or contact me on Telegram. There's also another kind of scam is about crypto coins that you click on it to buy Amazon coins. Ignore those. I never give out information in the comment section pertaining to emails, WhatsApp, or anything else. So it may look like me, but they're just like impersonating me. And also on Twitter, there are a lot of impersonators of my Twitter account. My handle is @Maneko1964. So read very carefully before you see a Twitter account that looks just like mine. I've had loads of people send me examples of it. I have reported it to Twitter, but they don't do a very good job. I've even trademarked a few years ago here in the UK, Maneko 64. I had to send them a copy of the trademark. But anyway, yes, back to the US zombie banks. And I spoke to John Titus February this year. And he was one of the first ones to see this. And it was February 22nd before everything kicked off. And he had looked at the not just the FDIC data, the unrealized losses that had gone off the wall. And we're going to look at that. But he had also looked at the federal home loan banks and the advances. What does that mean? Well, the federal home loan is a little bit like a mini Federal Reserve. And back then, in late 2022 and early 2023, a lot of the banks were in trouble. So instead of going to the Fed window, which would raise alarms, they went to the Federal Home Loan Bank for advances. And this chart here, as you can see, the last time they went for a lot of advances during crisis was during 2008. And then from the fourth quarter of 2021, you can see the advances went off the wall. They have come off. But that's not very healthy, and that's saying that the banks are still in trouble. The numbers here, of course, are only up until the second quarter of this year, so it's not updated. But yesterday, of course, we got the FDIC data for Q3. And I just wanted to apologize. I made a video maybe a few weeks ago or a month ago and said that they were going to come out in the beginning of November. No, they came out yesterday. But anyway, they've dropped to levels that we last saw in the third quarter of last year, before everything kicked off, of course. So as you can see here, the FDIC came out yesterday. I'll read that to you. Unrealized gains, losses on investment securities. Of course, the blue one is the ones that they hold to maturity. They don't sell it, and the regulator allows them to mark them to market, or mark them to maturity, which means mark them at par, even though they might be worth a lot less. But be as it may, it wasn't enough, this fact that it's held to maturity, to make depositors in SVB and other banks in March this year comfortable with having their deposits there. So there was a run on SVB and other banks, and they collapsed. The FDIC actually covered deposits over 250,000, which is really a bailout of those depositors. But as you can see here, we're at a record again as of Q3, and it says this chart shows the elevated level of unrealized losses on investment securities that has persisted in the industry since market interest rates began to rise in early 2022. Unrealized losses on available for sale and held to maturity securities totaled $683.9 billion in the third quarter, up 22.5% from the prior quarter, primarily due to an increase in mortgage rates. These unrealized losses represent a drag on future earnings, as these securities tend to be long-term and fixed rate, while funding costs continue to increase. So that's not going to help the economy, of course. So before we go further, just wanted to let you know about the Dirty Men Safe. Some of you already have bought a Dirty Men Safe. I'm affiliated with them. I've got a promo code, Maneco10. If you use that, you get 10% off. With all the stuff that's going on in the world with banks collapsing like we saw last March, I think it's more important than ever to put some of your valuables in a safe place. And the Dirty Men Safe could be something that will help you. So check out the Dirty Men Safe. There's a link below in the description to their website. They're shipping to the UK and the EU now. What is the key here to these losses? Well, the key is that the bond markets have come off a lot since late 2021 because the Fed has raised rates quite aggressively, relatively aggressively compared to the last 20 years, what they've done. Bond yields have gone up. They haven't really got a hold of inflation. Yes, they say that the CPI and PCE have come down, but that's the rate at which they're going up still. And luckily for them, going into the end of the year, bond yields have gone down, bond prices have gone up. And is it over? Is the crisis over? I don't think so. I think they're desperate. And this is speculation here. I think they're using Wall Street to help them. And what do I mean by that? Well, when I worked in the city of London as a futures and options broker, I did that for 20 years. And my clients were institutional clients, some hedge funds, and I had colleagues whose clients were really big hedge funds as well. And I remember hearing once that one of the big hedge fund managers from London and from the world really, and I'm not going to mention names here because I don't want to say, oh, he did this and that. But we heard stuff that he was traveling to Frankfurt, which was unusual because you don't need to travel around when you're running a hedge fund. Clients, or not clients, but brokers and bankers, they come to you and they schmooze you in London. But the story was that he went to meet the ECB. And these hedge funds, they did a lot of trading in the short-term futures, like the Euribor futures. And why is that important? Well, because it controls, Euribor futures are a reflection of ECB short-term rates, their decisions on rates. And if they can get the hedge funds to go along with them, you know, they can they can more easily cut rates or raise rates if the market is with them. And so what I'm trying to say here, yeah, they're in bed together. The hedge funds, the banks, the central banks. I mean, the hedge funds are just outsourced traders from the investment banks, because of the risk they take. They can't do it in the bank. So you get what I'm trying to say here. But about a month ago, maybe a little longer, there's a hedge fund manager on Wall Street, Ackman. He came out, I think it was just around the time 10-year yield went up to above 5%. And he announced to the world on Twitter or X, I've just closed my short on treasuries, covered the treasuries. Treasury prices had gone down, of course, yields had gone up. And you kind of wonder, because ever since he did that, treasury yields have dropped to like 4.25%, a huge drop in a month. And at that time, it was a big problem. Yields going above 5%, and the higher yields go, the worse it is for the banks and their held to maturity losses and their available for sale securities losses. It's a disaster. And I saw a tweet yesterday. Someone said, is Ackman controlling the bond market these days? And I thought, maybe not, but maybe he got a call from someone at the Fed or the Treasury back when yields were running out of control, up above 5%. Maybe they knew, they heard on the street that Ackman is a big short, had a big short on treasuries. And they could have said to him, look, we're going to announce something. We might have to intervene here. Just letting you know, maybe just kind of a signal. And so he goes and closes his short, tells the whole world. And the thing is, someone who's worth his or her salt and is a trader in a hedge fund, you don't have to keep telling the world what you do. So what do I think happened there? And this is speculation, of course. Well, they nudged him. They said, go with us, tell the world that you closed your short. And the market rallied and yields dropped after he did that. So maybe the ESF, the Exchange Stabilization Fund, or the Treasury through the New York Fed didn't even have to intervene. And then eventually they came out, I think Yellen came out. They said they're going to decrease the amount of securities in the long-term securities they're going to issue. And it just drove, everyone followed, and the market and maybe the Fed and the Treasury did a little bit of intervention. And Ackman looks really good. He's probably going to get some more money to manage. And maybe in the future, if there's some trouble with his hedge fund, maybe they will, the Fed will remember what he did. But this is just speculation. So I think they're desperate, and they're desperate to hold yields down. But I think what that's going to do, it's going to debase the currency even more. It's going to force the Fed to keep, yes, they're supposedly doing QT, but they're also doing this PTFP, which is the Asset Liquidity and Credit Facilities loans. As you can see here, they started doing that in March this year when everything kicked off and the regional banks went under. I mean, we've got here 114 billion of intervention. Yes, the balance sheet has come down, but that neutralizes some of the balance sheet. The other problem we've got is this reverse repo that is dropping at a constant rate and should be at zero by mid-February. We don't know how that's going to affect things. So, and that's why I think gold and silver are doing well. Gold and silver, physical gold and silver, of course, are outside the system. Yes, we have the other countries like China and others buying a lot of gold. But I think they see the writing on the wall. They don't want an exposure to the dollar or to the U.S. financial system or the Western financial system. And the same thing goes for individuals, in my opinion. There you go. With that, let's quickly look at where the markets are this morning. So yesterday, the big talk, of course, in the alternative or in the gold bug sector was about the price of gold closing about above 2,000 on a monthly basis for the first time ever. It did. I think we closed around 2,040. The previous highest monthly closing, I think, was 1989 back in April this year. So it is a breakout on a monthly basis, but still we've got the 2070 level or 2070 level, which is like an intraday high to go over. And as I always say, though, there are people who trade gold, paper gold and paper silver, and I think that's a tough game. I've done it many, many years ago, and luckily I was successful, but I think it's pretty much a zero-sum game. And the important thing about gold and silver is to have gold and silver and not to worry too much about the price, even though it's good to see, gold doing well, which is actually the dollar doing badly, right? And that's why the bankers, bullion banks, they try to keep control as much as possible, but they can't do it forever. So right now, it's 10 to 9 a.m. And we're at 2,043, up about $7. We're right near the highs. The low's been 2,035. What about silver? And talking about silver, Rudy the Silver Ranger, he's 1 year old today, December 1st. So it's his birthday. Billy, of course, we always remember Billy. Unfortunately, he died last December 12th. Billy, yeah. Anyway, well, silver, 25.31, we're up 5 cents. High's been 48, and the low's been 20. So silver is holding up well. I said there was a good level there, resistance level, key level at 25.27. It looks like we're breaking up or breaking out above that level. Dow futures up 84, NASDAQ unchanged, S&P up 7. To the currencies, sterling is up 0.25%, 126.54. The euro's unchanged, 108.90. The dollar's down 0.2 versus the yen at 147.88. And the dollar's up slightly versus the yuan at 714.80. Aussie dollar up 0.25 at 66.20. Dollar's down 0.25% versus the Canadian dollar, 135.27. Kiwi dollar is up 0.25 as well at 61.70. To the commodities, WTI crude is down 0.5%, 75.76. Brent is down 0.5% at 80.53. So oil has come off a little bit. But yeah, Brent's still holding above 80. Platinum is trading at 932, up about $5. And copper is trading up here as well, up 0.5% at 386. The 10-year yield is at 432. It's down 3 basis points. The UK 2-year yield is at 463. The 30 years at 475. So with that, I'm going to wish you all a very good day. Take care. Bye.